Hi everyone, welcome back. Now, in this session, let's continue our discussion in how to prepare a ledger account when I purchase an investment between two interest dates. Let us say on 1st September 2022, I have purchased 700 debentures of Z Limited. Entity Z has issued debentures in the market. I have gone and purchased 700 debentures on 1st September 2022. The interest rate is 12% per annum, which is payable in two installments on 30th September and 31st of March. All right, the interest is payable on 30th September and 31st of March. So if you look at it, the last installment of interest would have actually been paid on 31st of March 2022. The next installment is going to be paid on 30th September 22. One installment would have been paid on in March 22. The next one will be paid on 30th September 22, and I have gone and purchased the investment on 1st of September 2022. 5 months have passed by. 5 months have passed by since the last interest date payment, and I am now going and buying the bond from the market. All right, the face value is rupees 1000. All right, face value rupees 1000, and the cum interest price is rupees 1070. All right, the cum interest price is rupees 1070, which means this 1070 includes the interest that has been accrued from 1st April 22 till 31st of August 2022. The 1070 includes any interest that has been accrued from 1st April 22, which was the last interest payment date. All interest that has been accrued from last interest date up to the date of purchase from 1st April 22 till 31st of August 2022 is already calculated and is included in the cum interest price. All right, it's calculated and it's included in the cum interest price of rupees 1070. Next is 50 additional debentures have been purchased on 30th. Say, let us make it 31st instead. 50 additional debentures were purchased on 31st October with a cum interest price of rupees 1120. Now, if you take a look at this transaction, when I was purchasing these 50 debentures, since the last interest date, only 1 month has passed by, because over here the last interest date is actually now 30th of September 2022. All right, so since the last interest date, only 1 month has passed by, and this 1120, this price of 1120 includes that 1 month of accrued interest as well. This 1120 includes the 1 month accrued interest and is embedded already into 1120, and you do not have to pay over and above this 1120. What you will actually pay to the seller is actually the 1120 itself. Next is 300 debentures have been sold on 31st of March 2023 for rupees 1090. 300 debentures were sold on 31st of March 2023 for rupees 1090. Now you better thank me, because I could have made this sale also happen between two interest dates, but for the sake of convenience, I have actually presumed that the sale is happening on the last. Now, whenever there is actually a transaction where you're selling it on the date of coupon payment, then it is an implicit presumption that you're first receiving the interest and you're then actually selling it. All right, you're first receiving and then you're selling the debenture, and therefore, once you receive it, there is no X interest, cum interest, because you are standing on the coupon date. The concept of X interest and cum interest will come only when you're not standing on the coupon date, right? So when you're standing on the coupon date, there is only one price, and that is only X interest price, that is only cum interest price. All right, this is how it is usually presumed. There is an exception to this which I will deal with a little later. All right, in certain illustrations, there are cases where the institute has given the cum interest price. All right, the institute may actually give you the cum interest price, and if the institute is specifically calling this as cum interest price, then it is basically what it is trying to indicate to you is that we are actually selling before the coupon is received, because before the coupon is received only the cum interest price comes into picture, right? Once you receive the coupon, there is no X interest, there's no cum interest, there's only one price. But if the institute is specifically saying that on 31st of March 2023 you have sold it for a cum interest price of 1090, then the institute is indirectly trying to tell you that you have actually not received the coupon and you have actually sold the debenture before you received the coupon itself. All right, but that is an exception which I will come to a little later. For now, you can actually think of this as if it is they're saying that you're selling it on the last day, on the coupon date, then it basically means that you have actually received the coupon and then you're selling it in the market. And therefore, this price does not have any notation of X or cum because there's only one price because you're standing on the coupon date itself. So therefore, there were three transactions in total, my dear friends. One, we had purchased 700 debentures. Second, we purchased additional 50 debentures. And third, we have sold 300 debentures. All right. Just remember, I told you in lecture number 3 that when you're selling a portion of your investment, we apply the weighted average cost method. All right. When we are applying a portion of our investment, like over here, we totally had 750 debentures with us. I am selling only 300 debentures out of it. So therefore, we apply weighted average cost method for the purpose of calculating the cost of units sold, the cost of debentures sold. Now we have to prepare the ledger account. All right, we have to prepare the ledger account, which means indirectly I'm going to apply option B of what we actually saw in the previous lecture. The option 2, or the second method that we actually saw in the previous lecture, that is what we are indirectly going to apply by preparing the ledger account. All right. Okay, now let's just quickly summarize the facts. We have got a cum interest price of rupees 1070, right? Now this price of 1070 includes not just the true bond price, but it also includes accrued interest from the previous payment date up to the date of purchase. It also includes the accrued interest from the previous payment date up to the date of purchase. First, let's calculate the accrued interest from the previous payment date up to the date of purchase, which is from 1st April 22 till 31st of August 2022, because I've purchased the bond on 1st of September. Therefore, we are calculating accrued interest for this period, which happens to be rupees 1000 multiplied by 12% per annum multiplied by 5 by 12, because there are 5 months between 1st April to 31st of August. All right. So I do 1000 multiplied by 12% multiplied by 5 by 12, which is equal to rupees 50. So indirectly, this 1070 of cum interest price has got two components. One is the price that I'm paying actually for the bond, which is actually 1020, and the price that I'm actually paying for interest. All right, because the person from whom I've bought the bond, the person from whom I've purchased the bond, he was actually holding the bond for a period of 5 months. He was holding the bond from 1st April till 31st of August. So rightfully he is supposed to receive the interest, and therefore I'm paying him additionally rupees 70. All right, so 1070. I'm paying him additionally 50 rupees. I'm so sorry. So on a totality basis, I'm paying him 1070. Out of that 1070, 1020 is actually towards the price, towards the bond. 50 rupees is because he was actually holding the bond for a period of 5 months. All right. So this is how I've split the 1070 cum interest price into the true cost of the bond. This you can also call it as X interest price, right? This you can also call it as X interest, while this is actually cum interest. Okay, so and 50 is what you're actually paying for the interest piece, because he was holding the bond for a period of 5 months. Now, if you think of the journal entry, option number B in the last class, think of the journal entry, investment debit 1020, because you've purchased the investment, you're debiting it by 1020. Remember, you're debiting it by 1020. All right. Then you debit interest income by 50 rupees. You debit not accrued interest, you debit interest income by 50 rupees to bank 1070. There is a final cash outflow of 1070. Therefore, you're crediting bank by 1070. You debit investment by 1020 and you debit interest income by 50 rupees. All right. So that is going to be the journal entry. Okay. So now when we are preparing the investment ledger account, when we prepare the investment ledger account, let me bring the Excel file on the screen. This is the ledger account and we will recognize the first purchase. All right. So I am purchasing it on 1st September 2022. I will record two bank account. All right. I will record to bank account. In the cost column, I will write down 700 debentures multiplied by 1020. I am only recording the investment column by I am debiting investment by 1020, not by 1070, because the 50 debit is actually going to go to interest column. All right. This is the true investment column. And over here, I'm debiting it only by 1020, which happens to be 700 multiplied by 1020 because I've purchased 700 debentures. I will be debiting interest income by 50 rupees, and therefore over here it will be 700 multiplied by 50 rupees, which is actually 35,000. So if you actually think of it, the journal entry that I've actually passed is investment debit to investment debit 7,14,000, interest income debit 35,000, to bank account 7,49,000. 7,49,000 is nothing but 700 multiplied by 1070. If you do 700 multiplied by 1070, this is the total cash that you're paying, which is 7,49,000. Out of that 7,49,000, the cost is 7,14,000, while interest is actually 35,000. Okay, so this is the first entry that we are going to record. Then in the nominal value, like I said, it is a memorandum column. You will recognize the face value. You will record the face value 700 multiplied by 1000, which is equal to 7 lakh rupees. The next transaction is on 30th of September, not on 31st of October. The next transaction is on 30th September. You are going to receive interest. All right. You are going to receive interest. So you write down by bank account, nothing in the nominal value, nothing in the cost value. You will recognize the entire 6 months of interest in the interest income column. All right. You will recognize the entire 6 months of interest, how much ever you receive, you will be recognizing it in the interest income column. Now, how much interest are you actually receiving? You hold 700 debentures multiplied by a face value of 1000 multiplied by 12%. 12 percentage multiplied by 6 by 12. Why did we do 6 by 12? Because you're receiving in the first installment. You're only receiving the 6 months installment, right? So you were holding 700 debentures. The interest is calculated on the face value. Therefore, you've multiplied it by the face value, multiplied by 12 percentage, multiplied by 6 by 12, because this is the first installment. All right. So when you do that, 700 multiplied by 1000 multiplied by 12 percentage multiplied by 6 by 12 or 1 by 2. You can do either 6 by 12 or you can do 1 by 2. You have credited interest income by 42,000. If you look at it on a net basis, you have credited interest by 7,000 rupees. On a net basis, the total credit in the interest up to 30th September 22 is 7,000 rupees. That 7,000 is nothing but 1 month of interest, 1 month of interest for 700 debentures. If you look at it, 1 month of interest is actually rupees 10. Why do I say 1 month? Because you were holding it only for 1 month from 1st September till 30th September. You were holding it only for 1 month. That 1 month interest of rupees 10 for 700 debentures is what this 7,000 net amount is. All right. You were holding the debentures for 1 month between 1st September to 30th September. You are entitled to an interest of rupees 10. That rupees 10 multiplied by the number of debentures you were holding, 700, is nothing but 7,000, which is what you indirectly also got here. Okay. Next, on 31st October 2022, you have purchased again additional number of debentures. All right. Let's first fill the nominal value. All right. You purchased 50 debentures multiplied by a nominal value of 1000. All right. You purchased 50 debentures multiplied by a nominal value of 1000. This time the cum interest price is 1120. All right. You have purchased it for 1120. This is also again a cum interest price. Now, again, there is a need for you to split this between the true cost of the bond and the amount that you're paying for interest. All right. You want to split this between X interest component and actual amount of interest that is included in this. All right. Now, the actual amount of interest that is included is rupees 1000 multiplied by 12 percentage multiplied by, I know that my video is stuck, but I'm still continuing, multiplied by 12 percentage multiplied by This time it's going to be 1 by 12 because this is the period from 1st October to 31st October. The last interest payment was actually on 30th of September. The last interest payment was actually on 30th of September. Therefore, 1 month has passed by since the last interest date. 1 month has passed by since the last interest date, and therefore, when I am purchasing the share debentures on 31st of October, when I am purchasing the debentures on 31st October, I will pay additionally 1 month of interest. All right. This 1120 includes that 1 month of interest. This 1120 includes the 1 month of interest, which is actually equal to rupees 10. All right. This is equal to rupees 10 because 1000 multiplied by 12% is 120. 120 divided by 12 is rupees 10. So for 1 month, it is rupees 10. So this 1120 includes an interest of rupees 10, which means my X interest price is 1110. All right, my X interest price is 1110, which is 1120 minus 10 is equal to 1110. So for 50 debentures that I've purchased on 31st of October 22, the total cash outflow was 1120. The total cash outflow is equal to the cum interest price, which is 1120. Now, on 31st of October 2022, when I am purchasing 500 debentures, or I'm purchasing, sorry, 50 debentures, I am purchasing it at a cum interest price of 1120, which means my total cash outflow is actually 1120. I am having a total cash outflow of 1120, but this 1120 includes interest that has accrued from the last payment date up to the date of purchase. This 1120 includes interest from the last payment date up to the date of purchase. Last payment date was 30th September. Date of purchase is 31st October. Therefore, this 1120 includes interest for that 1 month. And when we calculated interest for that 1 month, it was rupees 10. All right. This came to be rupees 10, and therefore the X interest price is rupees 1110. The quoted price was 1120, or the cum interest price. We have broken that into the true cost of the bond, which is the X interest price, and the amount that I'm paying towards interest. All right, I've split that amount into two. All right, so now we are again coming back to our ledger. I am going to recognize in interest column 50 multiplied by 10 rupees. All right, 50 multiplied by 10 rupees. That is what I'm going to recognize in the interest column. Uh, sorry. And then in the cost column, I will be recognizing 50 multiplied by 1110. All right. So my total cash outflow is actually 56,000. My total cash outflow, if you do 50 multiplied by 1120, 50 multiplied by 1120 is 56,000. My total cash outflow is 56,000, but out of that 56,000, I have that 56,000 includes interest of 500 rupees, which is nothing but 1 month of interest from 30th September till 31st October. And the remaining 55,500 is actually towards the investment. It is towards actually the true price of the bond. That is the true price of the bond. And that is what I'm recording in the cost column. All right. So the journal entry, if I have to speak out the journal entry for one debenture, the journal entry would have been investment debit 1110, interest income debit 10 rupees to bank account 1120, investment debit 1110, interest income debit 10 to bank account 1120. In the for 50 debentures together, the entry is investment debit 55,500, interest income debit 500 to bank account 56,000. All right, so for one, I've told you the journal entry for one debenture, which is investment debit 1110, interest income debit 10 rupees to bank account 1120. Whereas for now 50 debentures, this is the journal entry, which is investment debit 55,000, interest income debit 500 to bank account 56,000. Now the next transaction is on 31st of March 2023. I am first going to actually receive interest income. I am first going to receive interest income, right? So it will be by bank account. Now Can I copy the above amount? The answer is no, because the above amount was only for 700 debentures. Now, on 31st of March 2023, I am the owner for 750 debentures. So, when I am receiving interest, I won't receive interest only for 700 debentures. I will be receiving interest for 750 debentures. All right, 750 debentures multiplied by 1000 multiplied by 12 percentage, again multiplied by 6 by 12, because this is the second installment. All right, is the company going to come and say that no, you have not, you have purchased 50 debentures only on 31st October, therefore you're not entitled for 6 months of interest? Is the company coming, company Z, will it come and say that to me? The answer is no. Although I've held the 50 debentures only for a period of 5 months, I will still receive the entire 6 months of interest from the company. All right, I will still receive the 6 months of interest from the company, and I've paid 1 month of interest at the time of purchase itself. All right, just because I was holding the debenture for 5 months, will the company only pay me for 5 months? The answer is no. The company will still pay me for 6 months, but I have already paid off 1 month of interest at the time of purchase. All right, so over here the entry will be 750 multiplied by 1000 multiplied by 12 percentage multiplied by 1 by 2 or 6 by 12, which is 45,000. All right, obviously it is higher than what we recognized over here, because I have now 50 additional debentures. The difference of this 3000 is because of that 50 additional debentures that we actually purchased on 31st of October. Now, does this, do we close the ledger? The answer is no. We cannot still close the ledger. I have sold 300 debentures on 31st of March 2023 for 1090. All right. And like I mentioned earlier, when nothing is mentioned, it is presumed that I actually received this interest. I actually received this interest, and then I have actually sold these debentures in the market. All right. So on 31st of March 2023, I am selling it for 1090. Now remember, we also have, at the time of sale, we also have to record any profit or loss that we have on sale of investment. But we have a problem over here. I have not sold all my debentures. Out of 750 debentures, I have sold only 300 debentures. Out of 750, I have only sold 300 debentures, and now I have to calculate weighted average cost. I am required to calculate the weighted average cost of debentures sold. How do we calculate the weighted average cost of debentures sold? I'm not moving into the notepad. I will just write it down here itself. I have got 7,14,000 for wherein I purchased 700 debentures, and I have a cost of 55,500 for 50 debentures. All right. So my weighted average cost at the time of sale, my weighted average cost is 714,000 plus 55,500 divided by 750 debentures. All right, this is my cost for 750 debentures. All right, so if I just quickly calculate, it will be 7,14,000 plus 55,500, the whole divided by 750 debentures. This is the cost per debenture. My cost per debenture is actually 1026. It's I think it has come up as a round figure. It's actually 1026. The cost per debenture is actually equal to 1026. Now I have actually sold 300 debentures. All right, I have sold 300 debentures. So the cost of my debentures sold is 300 multiplied by 1026, 3 lakh 7,800. All right, so it's going to be 3 lakh 7,800. Okay, so that is the cost of the debentures I've sold. All right, now if you look at it, the cost was 1026, or let us say the cost was 3 lakh 7,800. This is actually the cost of debentures sold. My sales proceeds, my selling price or the sales proceeds is 300 multiplied by 1090. All right, if you look at it, I've said that we have sold the debentures for 1090, so it's 300 multiplied by 1090, which will be 3 lakh 27,000. All right. So this is 3 lakh 27,000, which means my profit on sale is equal to 3,27,000 minus 307,800. I guess it will be 19,200. Let's just check that. I believe it will be 19,200. 3,27,000 minus 307,800 will be 19,200 rupees. That is my profit on sale. All right. So I have sold 300 debentures for 1,090 rupees. Is this X interest or cum interest? I'm saying it doesn't matter because on the date of payment of coupon, the price is only one price. All right. After the coupon has been received, there is no X interest, no cum interest. It is all only one price. All right. Because I'm standing on the date of coupon payment. I have sold it for 300 multiplied by 1,090, which is 327. The weighted average cost, how did I calculate the weighted average cost? I am saying that I purchased 7,14,000 for 700 debentures. 55,500 was the cost of 50 debentures. So 7 lakh 14 plus 55,500 divided by 750. 750 is the total number of debentures I'm having. The cost per unit is 1,026. All right. So cost of 300 debentures is 300 multiplied by 1,026, which is 307,800. All right. And the profit is equal to 19,200. The profit is equal to the difference between sales and cost, which is equal to 19,200. How will we recognize that over here? Okay. 31st of March 2023, I will recognize by bank account the entire sales proceeds. I will recognize the entire sales proceeds in the cost column. All right. I'm going to recognize just like how we did it in previous lecture, like in lecture number I don't know, lecture number three or two, four maybe. In lecture number four, how we recognize the entire sales proceeds in the cost column, and we will recognize the nominal value. I sold 300 debentures multiplied by a nominal value of 1,000. I will recognize the nominal value in the nominal value. I will recognize the nominal value in the nominal value column. Interest column, I will not recognize anything. All right, and then parallelly, I will recognize a credit to profit and loss on sale. All right. I will be recognizing investment debit to profit on sale of investment. All right. 19,200. All right. Nothing in the nominal value, nothing in the interest column. So what have I done? I've broken it down into two entries. One entry is where I'm recognizing the entire sales proceeds in the cost column, where I've recognized 3,27,000. After that, I debited investment account. I debited investment account and I credited profit on sale of investments. I credited profit on sale of investments to the tune of 19,200. All right. Where are we done with this? The answer is no. You will have to put the closing entries. All right. First, let us put the closing entries for the interest income account. All right. The interest income account on the year end will be transferred to profit and loss account. All right. It will be transferred to profit and loss account. If you look at it, the total of interest income is actually 87,000. The total is 87,000. Over here, you have 35,500. Therefore, the balance will be 87,000 minus 35,500. The net amount of 51,500 is what is going to be transferred to the P&L account. The net amount of 51,500 is what is going to be transferred to the P&L account. This 51,500 is actually the true interest that you deserve. This 51,500 is actually the true interest that you deserve, which I will come to. I'll show you in a minute, but let us actually finish the remaining part of it. You will then have You will then close the investment ledger by writing buy balance carried down. The nominal value of purchased is 7,50,000. You have sold 3 lakhs. So you have buy balance carried down of 4,50,000. You have buy balance carried down of 4,50,000, which is 750 minus 300. All right. Now coming to the cost column, the total debits are 788,700. You have a credit of 327. All right. So the remaining buy balance carried down will basically be 788,700 minus 327, which is equal to 461,700. So you are carrying carrying forward to the next year 461,700 cost of debentures, and the number of units that you are actually having are 450 units. You had 750, you sold 300, you're having 450 units, nominal value 4,50,000, cost that you're carrying forward to the next year is 4,61,700. All right, there are two things. One is, if you look at it, I mentioned that the cost that you're having is 461,700, and the number of units you're actually having is 450. If you do 461,700 divided by 450, I am not checking it. I'm sure that the answer will be 1026, which is the same as what you actually got over here. All right, the weighted average cost per unit was actually 1026. That will only come when that will, I mean, you're carrying forward to the next year also at a cost of 1026 per unit. All right, you're also carrying into the next year at 1026 per unit. That was the first thing that I wanted to show you. All right, so your closing balance is also coming in at the weighted average cost per unit. In this question, I did not give you information about the fair value on 31st March. All right, I did not explicitly say, or I did not explicitly give you the information of fair value on 31st of March, and therefore you do not have to do cost or fair value, whichever is lower. You do not have to do cost or fair value, whichever is lower. All right. Now, next thing is this 51,500. I actually mentioned that this 51,500 represents the true interest that you have actually earned. This 51,500, I said that this represents the true interest that you have earned. Now, let us actually see a justification for this 51,500. If I tell you throughout the year, you were holding 700 debentures for a period of 7 months. All right. You were holding 700 debentures for a period of 7 months. Sorry. And you were holding 50 debentures for a period of 5 months. All right. 700 debentures for a period of 7 months and 50 debentures for a period of 5 months. Now, on a per month basis, we also saw it number of times. On a per month basis, the interest is actually rupees 10. On a per month basis, interest is actually rupees 10. All right. So 700 multiplied by rupees 10 multiplied by 7 months. This will be equal to 49,000. All right. This will be equal to 49,000, and 50 debentures for a period of 5 months is 50 debentures multiplied by rupees 10 multiplied by 5, which happens to be rupees 2,500. I think what I realize is whenever I'm writing down, I think my video is getting stuck. Okay, so we have 700 debentures for a period of 7 months, and therefore it is 700 multiplied by rupees 10, rupees 10 being 1 month. All right, so 7 months ke liye I've got 70 rupees of interest multiplied by 700 debentures, which is equal to 49,000, and I was holding 50 debentures for a period of 5 months. All right, so rupees 50 interest for those 50 debentures, which is 50 multiplied by 50, which is 2,500. All right, so the total of this is 51,500. This is the interest that I truly deserve. All right. This is the interest that I truly deserve. Although the company had paid me totally 87,000 interest. The company had paid me total 87,000 interest, which is for both the first 6 months and the second 6 months. I am rightfully entitled only to 51,500, which is what I am taking into my P&L account at the end of the year. All right. I am rightfully supposed to take only 7 months of interest on the first 700 debentures and 5 months of interest for 50 debentures. That is what I'm taking into my income account. All right. That is what I'm taking into my P&L account. Although I have received 87,000 on a totality, although I've received 87,000 totally, I'm only taking 51,500 into my P&L account. All right. So that is how we would actually prepare an investment ledger account with Cum-Interest purchase. All right. Over here, I've taken Cum-Interest purchases. I will take another example where I have both X-interest and Cum-Interest, and then I will continue to keep sale as on the date of coupon payment. All right. In the next illustration, in example number 3, I will actually take cum interest purchase and ex interest purchase, and I will take an example where debentures are sold on the coupon date itself, because I don't want to touch the sale on being a non coupon date. And then after that, we will continue our discussion on sale happening on a non coupon payment date. All right. That's it for this lecture, guys. Thank you so much. Bye bye.